Hey, Facebook, how you guys doing today? And everybody else, we're going to get started here in just a few seconds as we let people in. If you guys at any point need to get a hold of me, you can reach me below at the information, Joe at Robert Ventures, or on Facebook, LinkedIn, or Twitter. Good, let's roll. So a little bit of background about myself. I've been a real estate investor now for 18 plus years. A lot of my investment has been in the residential space, and over the last 7 years, been investing in residential mortgages, along with some residential and commercial portfolios in Puerto Rico. And as we move forward with this show on a weekly basis, our goal here is to bring on accredited investors that have done well in their investing career or on their way to being an accredited investor. These people that have invested in real estate, mortgages, small businesses. And today's guest is Alberto.
You want me to jump in? Or?
There we go, buddy. Give us an introduction and a background about yourself, please.
You got it, buddy. Yeah, Joe, I really appreciate the opportunity to speak to your audience. So I was telling you before, I love to learn and I love to teach and I love to help people. Yeah, I mean, as you know very well, right? I have a diverse background and maybe a little bit too diverse. I love computers. I love technology. I love artificial intelligence. But like you, and this is how you and I met, I also have a few notes here and there, a few properties here and there that I self manage, and they've been very, very good to me. So I'm always looking for opportunities, right? And then there always are, right? Like my latest venture is to try to understand how to trade currencies, right, in the currencies market, just for fun. I mean, it's just more than anything else. But yeah, I mean, that's about my background, all over the place. Take it from there, buddy.
We'll talk about diversity. Do you feel that, what is your opinion on that, focusing on one aspect or being involved in multiple aspects?
Oh, I'm huge on diversification. I mean, it's whenever anybody asks me like what to invest in, I always give them the asset of diversification, right? It's that's where you need to be, right? Because we're seeing it right now with the stock market, right? If I was like fully invested in the market, I would be in trouble, right? If I was fully invested in real estate, I'm going to be in trouble in the next 3 or 4 months, probably, or next few years. If I was fully invested in Bitcoin, I would probably be in trouble, right? But by being able to be in a variety of risky assets, it allows me to diversify and flatten that curve of risk that's there, right? So, like, for example, the one thing that's doing pretty well right now, I mean, like not as good as you would expect, but it's doing pretty good, is gold. Right, so everything else is down, but gold is doing well. I think Bitcoin is also starting to catch up again, right? But yeah, diversification of your investments, I think, is critical, especially in this kind of environment.
That's good. If any of our viewers have any questions along the way, they can feel free to drop them in, and we'll see what we do to get them answered. Going through times like this, why do you think mindset is so important?
Yeah, mindset is huge, right? And more now than ever, right? It's easy to be optimistic when the market's up 20%, when your investments are doing well, right? When all your tenants are paying you, when all your note borrowers are paying you. But it's not so easy when you see everything around you, and all you see is like death counts and tenants calling you that they can't pay and so forth, right? So more than now than ever, having a calm mindset to see clearly as things unfold and to see not only what's happening right now, but what's going to happen in the future is super critical. So I was just talking to a guy on Facebook that I don't really even know, and he was saying, I'm super depressed, right? And I know this guy, I mean, like from Facebook, right? I mean, I know he's super successful. He's a flipper. I see all his flips all the time in the last 3 or 4 years. Beautiful work. He really knows what he's doing, but like this kind of hit him hard, right? So you have to really kind of keep it together. And I'm not saying that he's doing the wrong thing. He just kind of let the gravity of the situation get to him, right? And he's now in a funk that is not related at all to what's happening. Yeah, I mean, we're going through a tough time, but you can do one of two things. You can just kind of roll up in a ball and panic and not do anything, or you can just stay calm, do what you think is best for you and your family, right? And part of that might be following the guidelines that the government is telling us to do. But at the same time, while helping people, and I know we're going to go through a lot of pain in the next few months, but you can only help people if you help yourself, right? And you can only help people that want to help themselves. So having that positive mindset is critical in order to be able to receive help and in order to be able to give help. So that's why it's important, Joe.
And so why, what comes to my mind there is a big factor that everyone always has room to improve on, and that's communication. And, maybe like the guy you're talking about, just, being able to communicate with others and those around you is, goes a long way, and kind of comment there on communication.
Yeah. I mean, that's exactly right. Like, let's keep going with that example of my Facebook friend, right? I reached out to him. He was kind enough to reach back, right? And we chatted via Facebook to see what he can do, right? And then right now, forget the flipping, forget the opportunities. So what he needs to focus on right now is to get himself out of the funk, right? And you do get to a certain point where you actually do need to reach out for professional help, right? My dad, he passed away about 10 years ago, and many of the lessons that I know today are lessons that he gave me, right? But he was clinically depressed all his life, right? But one thing that he was really smart about was that he always knew he had a good pulse on his body, on his mind, to know when he was kind of going into that funk, right? So funny story, his best friend for the last 30, 40 years of his life was his psychiatrist, right? But and they knew very well, both of them. It was really interesting to see them, how they would turn off, right? Like the friendship relationship, and how they would go to patient-doctor relationship, right? Like it's very different. But yeah, I mean, you have to really be every day, just check yourself, right? Am I doing okay, right? And if you're not, a little self-care, right? Like get on the tub, go for a walk, clear your mind, right? Whatever you need to do right now to make sure that you stay positive is critical. And also reaching out to your friends, right? And communicating with hey guys, I'm not doing good, right? Or hey guys, I have this problem. How can and we're a really good example of that, Joe, right? Like you keep on calling me all the time to tap my brain. I keep on calling you all the time to tap your brain. Nobody has all the answers, right? So we're all experts in our little niche of expertise, right? Like I know that you're the crypto god, right? So whenever crypto questions, I know who to go on call, right? And at the same time, I mean, you're following that advice that I was giving before, right? I know that you're big into crypto, but you haven't, let go a lot of your other investments, right? And I know that you're going into other areas, right? So yeah, we're touching all the right stuff, Joe. Communication, mindset, diversification. This is all really good stuff. Go ahead.
Well, we got Steve Lloyd is watching, I think, so we want to just say hi to him.
My boy.
And as you can see here, a question came in. So what is the one asset that you are super excited about over the next 5 years? Only pick one.
That's great. Yeah. He texts me or he calls me every month to ask me the same question every time, so which is great. Actually, my question, my answer to that question, Steve, has not changed, right? And yeah, everything is going to be appended. There's going to be a lot of winners or losers. Airlines are going to struggle, but I mean, even there, you can still make money if you time it right and so forth. But my answer to Steve's question is still going to be the same one that I give him, which is AMZN, Amazon. I think that they are going to be huge winners in this, right? I'm really, really bummed out that the stock has not gone down as much as I would have liked it to, right? As of this morning, I think it's at $2,030, right? And Amazon always looks expensive, right? But it's always been a good time to buy it, and even right now, I mean, I'm buying it at 2,000, right? So like I started buying it when I was at 700. 700 seemed really expensive, and but you know, I closed my nose and I jumped in, and I'm happy for that investment, and I'm still, you know, dollar cost averaging into that investment. And the reason that I'm so excited about Amazon is, number one, you know, the obvious reason of you know, they're crushing it right now, right? With deliveries, they're making money on their advertising of things that they have on their market. They're crushing it on the fees that they're charging on the market. Well, what very few people know is that Amazon makes a humongous amount, maybe like 70, 75%, depending on the quarter, of their profits off of something that has nothing to do with the Amazon marketplace. What they make their money on is AWS, right? So their sales, their AWS sales, are a lot lower than the sales that they do in the marketplace, but the profits that they get from AWS are, you know, look up the K1s, look up their financials. 70-80%, depending on the quarter, comes from AWS, and that sucker still keeps on growing 30-40%, right? So again, there, I mean, like, everybody's like really excited about Zoom and DocuSign and all this, like, companies that people think are going to be, you know, the next winners, right? But guess who powers all those suckers, right? It's either AWS by a long shot, right? And the second place is Microsoft, right? And Microsoft, you can see it also in their stock, right? Like, they did a really nice transition of being now a cloud company, or being a cloud infrastructure company, and there's nobody else behind them, right? I mean, distant third is Google. IBM is nowhere to be seen. Oracle is nowhere to be seen, right? So like, yeah, that's my advice, Mr. Steve Lloyd, the giant of the industry.
Do you think Amazon has to worry about the government coming in and splitting them up because of their size? And kind of, what do you foresee in the future on that?
Yeah, I mean, that's like the one worry, right? I'm not worried about anything else with Amazon, but you know, unfortunately, we live in a society that whenever somebody becomes too big of a winner, right, they're like, hey, you know, we can't have somebody winning, you know, this hard, right? And that it might probably won't happen in the next year or two, but as they continue to get bigger, and my prediction is that they're going to be the next $2 trillion company, right? So like, Apple beat them to be the first $1 trillion market cap company, but I have no doubt in my mind that they're going to hit $2 trillion before anybody else. And once they start getting really big, yeah, it's going to be for sure a risk that you take if you invest in that company.
So I know we all been stuck at home, and you know, we're trying to work, manage the kids, stay sane, and you know, get as much done with business as possible. And on the the other end, you know, when it comes to health, we all are, maybe some might be eating a little too much because they're a little bored at home, going to the snack cabinet more than once or twice a day. So go into you know, how important is it when it comes to health and fitness, you know, on the overall lifestyle, and you know, take it from there.
All right, sounds good. Yeah, so I mean, back to my boy Steve Lloyd. He has this thing, and I'm going to call him out. He has, I think it's May 1st. I think he's gonna post a picture of himself. I think that's what I'm thinking is gonna happen, right? Because he's been working super hard to get really fit, to eat well, and I'm so proud of him. I'm so excited for him. That I know that's something that he has like struggled with. You know, he's one of the most successful and most optimistic and most awesome people that I know, but his health is something that we've all, you know, kind of been worried about, and I'm not worried about it anymore. I mean, he's crushing it, but he's got a little bit of competition. I hope that same thing with you, Joe. Like, I've been super conscious of my health right now. I got a nutrition coach, right? Like, more than ever, we have to be mindful of what we're putting into our bodies. It's so easy, right? When you have the fridge like 10 feet away, right? It's so easy to put the fridge, and the simple solution for that is pardon my language, but don't have crap in the fridge, right? Like, if you have Oreos in the pantries, if you have ice cream in the pantry, that's going to get eaten, right? Like the second that you put something in the cart, in the shopping cart, it's in your belly, right? So one of the things that my nutrition coach asks me to do all the time is every week, whenever I go to the supermarket, I'm supposed to send him a picture of what's in the cart. And but he's so freaking tough. I mean, like, forget about pizza, ice cream. I mean, like, that's not even like a what's the word I'm looking for? Like, not even a thought, right? In the text that we have back and forth, as far as like criticizing my eating habits, right? Like, if my micronutrients don't hit 100% on the fiber, right? Because I didn't eat 400 grams of broccoli, he'll get on my case, right? And I'm making it sound like super hard and super strict, right? But like, the stuff that I'm eating is stuff that you again, with your mindset, you become accustomed to, and it's all delicious, right? Like, I'm eating, of course, a lot of veggies. You have to, right? And but you can broil them, you can saute them. Like, fat is not necessarily, you have to limit the amount, and he has certain limits that we need to hit. But you can saute it, like, you can use butter, you can use EBO, or like, there's certain things that you're allowed to use, right? Tons of chicken. At night I have to force myself, right, to consume my chicken, my fish, to hit my protein goals, right? I'm eating so much fruit, right? So like, it's I'm having a awesome time, and like, the hard thing is to eat all the food that I'm supposed to be eating, right? But yeah, I mean, the food that I have in the fridge is all allowed food, and then that way I don't have the problem of cheating, right? So yeah, that's what I'm doing right now, Joe.
So you don't have a freezer full of frozen pizza or anything like that?
Oh my goodness, no. Like, I would, the guy would come over and just wring me by the neck. I'm so afraid of him, which is, I think is a good thing. But yeah, I can't wait to be in the beach with our boy Steve Lloyd, and see Mr. Joe Robert with his six pack at the beach.
Yeah, let's Steve's going to invite us all down. Isn't that what he said? We posted
Yeah,
at some point
that's
here,
right.
right?
That's right.
When it comes to exercising, I know you do a bit of running. What do you do there, and how often?
Yeah. So like, no excuse there too, right? I mean, like, we can all run, right? I mean, for example, in New Jersey, they just closed the state parks, right? So yeah, I can't run in a state park, but I can still run around the block here, right? I mean, they have that video on the internet, right, of the guy that ran a freaking marathon in China, in Wuhan. He ran it in the marathon in his living room, right? Like, I don't know how many laps he did, right? But like, still no excuse, right? So my CrossFit gym, my box, as they like to call them, we're doing virtual classes, right? So every day at either 4:30 p.m. or 7 p.m., we get on the Zoom, and I would have thought, right, that the exercises that we're going to do, we're going to be nowhere near as hard as what we regularly do in the gym, right? Like, when you go to CrossFit, you're doing, squats with 135 pounds, and you're using all this like weights that they have, and they have some really nice equipment, right? And I was thinking it's not going to be the same, right? But we're doing all like body weight stuff, right? Like well, you can't do box jumps, but I mean, yeah, we've been doing a lot of burpees, if you can imagine, right? So you can still do push-ups, you can still do squats, you can still do sit-ups, right? So there's an app out there called 7-Minute Workout. If you download it, it's free, right? 7-Minute Workout. Do that workout, and I guarantee you, in 7 minutes, you're gonna be hurting. It's amazing, but yeah, it doesn't take that long to get your heart rate up. Get your blood going, get your sweat dripping, and keep doing it, keep pushing it. Go ahead, Joe. What's the next question?
So that's good. So I guess let's go into some investing aspects and into the different markets that we both have, played in a little bit. So into the note investing, I mean, what are you seeing in the marketplace, and what are you seeing in regards to performance of your existing loan portfolio, and how are you, mitigating any fires, and working with borrowers that may need help or were laid off?
Sure. Yeah, so I mean, as you know very, very well, right? I mean, we met, you were just saying, we met 9 years ago, and it's been such an amazing ride with notes, right? So I know Steve Lloyd also has a lot of notes, right? So I haven't really bought or sold notes in about 3 or 4 years. I just kind of got a little tired of how difficult it was from a compliance standpoint to stay compliant, right? Like, I'm very cognizant of that and making sure that whenever I get into a business, good job, Steve. 20 push-ups from him. Yeah, buddy. And yeah, so he completely made me lose track of my thought. But no, yeah, like back to the notes, right? So I haven't really been investing in notes as much. Another thing that I was doing was with Lending Club and Prosper.com. It's another company where you can actually buy much smaller notes. I think the returns that I was getting there kind of dipped down once Lending Club became a public company, because now they have two masters that they have to answer to, right? Like both their note investors and their stockholders. But yeah, no, I think that if things keep on going the way that they're going, I think we're in for another cycle. I'm not sure yet, depending on how quickly we remove the lockdown, if that's gonna be an issue or not, and we're gonna be able to have a lot of opportunity to buy notes. But yeah, I mean, like it might be something that might be worthwhile getting into in the near future. As far as my current notes, yeah, I have gotten calls from my borrowers, from some of my borrowers, like not all of my borrowers. But what can you do, right? I mean, like you can't get blood from a stone, right? So like immediately, yeah, 60-day forbearance, no interest, no penalty, right? I mean, like that's especially a lot of these folks have been people that have been paying like clockwork, right? And now's the time to cash in those chips, right, of goodwill that they have built up, right? Like the people that were behind before, they're still going to be behind, or if not even more behind. And those are the folks that we're probably going to have to do some sort of loss mitigation there, like and we'll figure it out as we go along, right? But that's not even in the property side, right? That's something that I've seen play out pretty well. 3 of my tenants actually were diagnosed with COVID, right? And when I heard about that, like my first thought was, reaching out to them and making sure that they were healthy, and rent was the last thing in my mind, right? But when rent time came around, I just sent them a text, right? And without prompt, all those 3 of those tenants, they said, I know you have a mortgage, my rent's going to be on time, right? And they were conscientious tenants before, and very responsible tenants before, and they're responsible now, right? Like now the ones that I've been bumping along, before and so forth, they're bumping along right now, right? So those are the ones that I'm going to have issues with, right? But that's nothing new. So if this goes a little longer, we'll probably have more issues, right? But so far so good, and hopefully this will pass quickly, which is actually my prediction, right? I think that if we're not at the peak of, let me make it very clear, if we're not at the peak of new cases, right? That's what you need to be looking at, right? Don't look at the scary curves of daily deaths, right, and cumulative deaths and cumulative cases, right? Like that's going to be a very ugly curve. What you have to look at is the number of new cases that are occurring every day. Right? So, for example, New York, everybody knows that this is the one that's having a huge problem. We've had 3 consecutive days of more people getting discharged than getting admitted into the hospitals in New York, right? So that's a very, very positive sign. And I seriously believe that we are at the peak. That doesn't mean that we're out of the woods, and that doesn't mean that we should start hugging each other. Even as I want to give you a hug, my buddy. But I see Jen getting jealous over there. But yeah, no. So it doesn't mean that we have to like let up, put the foot off the accelerator. But I think that we are at the point where the light at the end of the tunnel is going to start being visible, and we're going to start seeing some progress. And we're now on the downslope. I think it's going to be a slow down slope. We're not going to come down as quickly as we went up. And I'm talking about COVID cases right now, right? Yeah, I think in that side we're on the way down, right? And the progress in the economy hopefully will be soon behind, right? I think that again, it's not going to be a quick recovery. I think when it comes to the stock market, we're already seeing it right now, right? But the points that we lost quickly, I think we're going to gain them quickly, but we are going to get in a kind of like a funk in the next few days and months, and weeks and months, where it's going to be slow stretching. I'm not calling the bottom. Be very mindful of that, right? Like we might still revisit the lows, right? Which was I think 2 weeks ago, if I remember correctly, something like high 1900s on the Dow, right? So we're well off of that. We might still revisit, on the 20K point in the Dow, but that doesn't mean that we're not still going to have a quick recovery off of that. Up until like the levels that we're at right now, I think we're probably right about where the slow treading is going to occur, right? But yeah, definitely a lot of opportunities. That's my thoughts on that, Joe.
Cool. And so as you started into the real estate realm, I know that you work a full-time job, and you also have all this investing on the side and no excuses not to get anything done. So that's great. I love seeing that hustle. You know what I mean?
Oh, you gotta hustle. You gotta hustle. I mean, let me make a quick point on that. I mean, if you're anybody that tells me right now that they're bored, I want to slap them. I mean, seriously, like so many people going through tough times, so many people going through some difficult times, right? And I mean, I see it with my tenants, right? Like they're hustling, right? Like the people that got laid off, they're doing deliveries for Amazon, they're doing deliveries for Walmart, just anything to kind of feed their family and help their family, right? So there's opportunities at every level right now, right? And so if you're bored, I'm sorry, but I have no patience for people like that. And you should be. This is the time, right? Like to work on your side hustle, work on your fitness, work on your health, work on read a book, right? Get your mind clear, right? Whatever it is that you need to do, right? But I don't want to hear those that 5-letter word of I'm bored. It just should not be happening. Go ahead, Joe.
Yeah, I mean, I agree there. I mean, one of the things obviously led into the bringing us here today was I've been putting off a little bit doing live interviews on a weekly basis and trying to get a little bit more public exposure, as I've been quiet over the years and what I have been doing. And so being locked down here was like a good time just to get this going, because a lot of other people were going to be available, and make it much easier to launch. And so that's one of the things that I'm taking advantage of. And so that beyond that, also going through the CRM, all the contacts, reaching out to people and just touching base, see how they're doing. Remind them that I'm here. So if any kind of deal flow or anything opens up later in the year, that we still touch base. And I mean, it's a great time to get things done because everyone else is moving slower.
Absolutely. If you're not doing any of those things right now, right? Like you didn't, that excuse that you had all the time of like, I don't have time. You had the time. I mean, like we have time right now, right? So you didn't not have the time. You just lacked discipline. That's what it was, right? So let's get tight. Let's take advantage of this opportunity, right? And if we all work together by helping each other, by taking care of our business, right? Like as our friend says, stay in your lane, right? Like focus on your business, right? And your partner, I'm blanking out on his name right now, but yeah, I mean, he that's his phrase, right? Like you got to stay in your lane, you got to take care of business, and this is a time. But also at the same time, use this opportunity to learn a new skill, right? I mean, like it sounds like Steve Lloyd is learning how to do push-ups, right? So that's a great thing, right? So yeah, no, and jumping rope, playing the cello, trading currencies, you name it. I mean, just whatever it takes to get yourself out of your comfort zone, right? You should always be doing that anyway, right? But now more than ever.
So, going into the real estate aspect, I mean, I know you've acquired a rental portfolio over the years while working your full-time gig and doing most of the management yourself. I know a lot of people here that are probably working a full-time job. They're going to be looking to get into real estate, and maybe later on in the year there will be some opportunity in the marketplace for them to get back in. And what guidance can you give those people to help them dive in themselves while they're still working a job?
Great question. So at the beginning of the of our chat, right, I was talking about diversification, right? Now I'm going to throw a curveball and tell you completely the opposite, right? So just because you're getting into a new business, right, doesn't mean that you should be all over the place, right? And like now, if you want to get into real estate, now I'm going to be a flipper and I'm going to get rentals and I'm going to do an Airbnb and so forth. Right? Like whenever you get into like a new arena, right, like that you know you're uncomfortable, start out very slowly and stay very, very focused, right? So I'll give you the example that what I'm doing is I'm not doing flips. I'm not doing Airbnb as excited as I am as potentially doing that, right? Like seeing Steve Lloyd crushing it with that, right? But I'm very focused on buying small units, like C-class units that I can buy at a reasonable price, and then I can rent them out to, like there's some of them are Section 8, some of them are just people that, just blue collar, hardworking people, right? I'm very, very careful with my tenant screening, right? And that has been, just laser focused on that. What I mean by reasonably priced properties, right? So everybody thinks that they need to get 20-30% below fair market value, right? Most of my properties, I would say maybe all the properties, I have bought them right at what Zillow says, right? And I know that Zillow is not the end all be all, right? Price determinant, right? But especially for things like this, like the condos that I'm buying, is fairly accurate, right? Because if you're in a place where there was like 200 other condos sold, right? It's not going to be like where, one sold for 50 and the other one sold for 100, right? As long as they're apples to apples, right? If one of them needs a lot of rehab, there's going to be differences there, right? So what does that mean reasonably priced? Run your numbers super, super strictly, right? So I have a very strict criteria of of how much cash flow I need to have on the deals, right? And in the areas that I'm buying, if I don't get 10 cap, right? If I don't get a 10 capitalization rate, I'm not buying, right? And that's what I mean by reasonably priced. Once I use all my criteria of putting in accounting for vacancies, accounting for repairs, accounting, of course, your insurance, your taxes, and your HOA fees. After that, if I'm not making a 10 cap on the deal, I pass, right? But I'm not looking for get a crazy amazing deal. I'm not looking for, you're not going to get 20 cap. You're not going to get 16 cap, right? You need to be realistic, right? And that's how you're going to be able to keep on closing the deals, right? Like once you find that something that meets that criteria of like 10 to 14 cap, right? Pull the trigger, do whatever you need to do in order to get the property, right? And you'll so far so good, knock on wood. And go ahead.
And for those that are watching may not know what a cap is, that's going to be the income or the net income after all expenses divided by the purchase price. Correct?
That's exactly right. Without taking into consideration your interest expenses, right? So like that's another metric. Like my main metric is cap rate, but I'm also looking at my debt to income ratio. I'm also looking at my ROI and so forth, right? But if the cap rate works out, all the other numbers are gonna work out. Like it's not they're correlated, right? Like they're tied to each other. So if you get a good cap rate, you're gonna get a good ROI, and you're gonna get a low debt to income ratio. So yeah, right on the money.
All right, I think we have a quick question. Do we have a quick question here?
Oh yeah, from Steve. Go ahead, Steve.
Are you leaving?
You're on with Joe and Alberto. Go ahead.
Are you leaving any assets that you owned 6 months ago to shift your investment somewhere else that you feel more positive about?
Yeah, good question. So I mentioned this a little bit before, right, with the notes, right? I got a lot of calls from people asking to do forbearances, but I got a couple payoffs, right? So as the payoffs come in, I'm not using them to buy new notes. I got a beautiful email the other day for like a $77,000 payoff, like no discount and so forth. So that was like a beautiful thing to see in the inbox. And as big as that number is, I mean, as you know, Joe, payoffs are always like a bittersweet call or email, right? Because now you have all this money, but now you have to deploy it, and two, now you have to now you don't have that monthly payment that you were having with that note, right? So yeah, I'm shifting into all my other assets that I like to do, right? So like I have everything kind of like, or as much as I can on automatic, right? So you spoke about my job, right? On my job, I'm participating on my 401k to the limit, right? Whatever they offer, I'm maxing that out. And throughout this time, I have not, tried to day trade or, everything there is boom, boom, boom. Like the money comes in, max it out, put it in the market. Money comes in, max it out, put it in the market. I haven't looked at it, right? And probably not a good thing to look at it right now, right? But from the time that this started to now, it's all in automatic, right? I don't even have to like touch it, right? Same thing. They give me company stock, right? So take advantage of that. Like it's optional if you want to take it or not, right? Like they sell it to you at a discount, but of course I'm going to max it out. That's free money that they're giving me. Why wouldn't I take it? Max it out, keep buying it, right? Like on automatic. So every biweekly payment that I receive, that's happening. With this kind of payoffs, right? What I'm doing is diverting both to rentals and to your favorite, to crypto, right? So I know I'm probably paying more than I should be paying, but I have a simple thing with Coinbase, right? Like with the kitty Coinbase, where they take money out of my my account, the crypto gets bought automatically, right? So like none of that I haven't touched it. It's all happening. Another thing that I do, and I really love this automatic investments, right? So everybody is probably aware that a lot of the brokers, right, like the Charles Schwabs and the TD Ameritrade and so forth, they all got rid of their commissions, right? Which is great, and it makes it a lot easier for people to participate. Now you can go in and buy one share of Amazon, right? And not worry about how much commission you're paying, right? Some of the brokers that are out there actually allow you to buy partial shares, right? So if you can't buy a whole share of Amazon, you can buy partials. Let me give SoFi a little bit of a plug on that, right? Like that's one of the services that I use to buy partial shares. I don't know if it's worth mentioning this, right? But the reason I'm going to mention it is because I haven't found anything similar yet to what I'm going to say, right? So for the last 25 years, I've been participating in something that's called DRIPs, right? Dividend reinvestment plans. What that is every single company that offers a dividend, actually maybe not every single company, but a lot of companies that give a dividend, right, have these DRIP plans. I think every one of the companies is obligated to have what they call a transfer agent.
Yeah.
Not all of the companies have a DRIP plan. And what that is there's three companies that I know of. One of them is called ComputerShare. Another one is called Broadridge, and the other one is managed by Wells Fargo. I think it's called Equinity, something like that. Maybe I'll send you the link later, and we can post it on the chat. But all those companies have relationships with the McDonald's of the world, with the Kellogg's of the world, with the utilities of the world, with the McCormick's of the world. Right? All these like Dividend, beautiful companies that day in and day out are paying their dividend. A lot of the oils, of course, have that, right? And I have oil companies with my DRIPs, and I don't care, right? Some of them are down, and are actually probably all of them are down, right? But now that as I'm sending them that automatic money every month, your dividends, number one, get reinvested, right? And any money that you send them, you can set it up where it automatically gets reinvested into these companies. Now, I think that might be changing in the near future, right? I know that you still can't do it with Robinhood. You still can't do it with a lot of these services that pioneered no commission investing, right? And the reason is because that's where they get their money, right? When you send them money and it's sitting there in the account, one of the ways that they make money is by that money sitting in there until they wait for you to invest it, right? But I much prefer the automatic investments, right? So look into that. ComputerShare, the Wells Fargo service, I'll get you that, and Broadridge.
And what? Any opinion on the public REITs?
Yeah, I have those too. I mean, what's not to love, right? I mean, my two favorite ones are NLY and AGNC, right? Anali Capital, and the other one, I'm forgetting the other name. Maybe Jen can get us the name of the NLY ticker symbol, right? So NLY went down from $10 to $5, right? So what that means is the dividend went from 10% to 20%, right? Again, automatically investing into those through the DRIPs, right? So they have some of those REITs are in my DRIP plans, right? And I'm buying those there on a consistent basis, right? So the thing about DRIPs, right? So with the other stocks, right? I'm not too worried about the stocks, right? Because since I've been participating for so long, a lot of these stocks I've bought them, when they were like, I started buying them, right? When they were like 3, 4, 5 times cheaper than they are now, right? But with the REITs, it's a little bit different because they're obligated to pay out all the dividends, right? A dividend is not secure, right? Like a dividend, they're not obligated to not pay a dividend, right? So it has happened with the REITs where they do bring the dividend down, right? But at the end of the day, what is a better purchase right now, right? Like that NLY when it was at $10 or NLY now when it's at 5, right? So just this morning I bought a little bit more NLY, right? It's been good to me, right? And hopefully it'll continue to be good to me. Another way to think about it is this is unprecedented times, right? So let's not go from like 10 to 15, right? But or sorry, from 10 to 5, right? But let's take a more normal example, right? When if it goes down from 10 to 8, right? Which it happens a lot, right? What that means is I only needed to be in there for 2 years. If it goes from 10 to 8, I'm still even, right? So I got 2 years worth of dividends, right? At 10%. So that means I got $1. If I did it for 2 years, I got $2. And now I'm even, right? If it doesn't go down, I got paid 10%. So I love it, right? Yeah, I mean, if you want, Joe, too, we can talk a little bit about crypto because I know that's your specialty, and I'm excited about that as well and what's going to happen in the next few years with that.
Yeah, I mean, there's we don't like to get into speculation here or all that, at all. And it's interesting to see everything flying around the internet at the moment, right? I mean, everyone's forming opinion, everyone's speculating on what's going to happen, but typically, 1 out of 100 is ever going to be right? Because no one could predict the future, or else we would all be, Jeff Bezos, right?
Right.
And what is your opinion, of people buying gold, silver, and Bitcoin right now?
Sure. Yeah. So this is how what the beauty of and again, this is for Steve, if he saw him, because I know he's not sold on crypto yet and sold on Bitcoin, which is fine, right? But this is, and you're right, nobody knows the future. I don't know if crypto is going to be, if Bitcoin is going to be 5,000 next year, or if it's going to be 20,000 next year. One thing I know about Bitcoin, and this is a really important thing, that when Bitcoin gets to 21 million Bitcoins, they will not produce any more Bitcoins. That's it. Can we say the same thing about the dollar? Can we say the same thing about even gold? Can we say the same thing about any currency that's out there? No. I mean, like look at Venezuela, look at Russia, look at Germany in the 1940s, right? I mean, and honestly, that's what we're doing right now, right? We're printing Venezuelan dollars to try to avoid the crisis, and all we're doing is we're pushing back the crisis a little bit, right? So am I still excited about real estate and Amazon and so forth? Yeah, but because I'm hoping that they're faster, right, than how we're printing money right now, right? And let's lump real estate into the equation as well right now, right? Like, so whatever properties you buy right now, if and when inflation hits, right, that's probably going to help your properties, right? Because they're going to appreciate in fake dollars, right? So like if you bought something for 100K, a property for 100K, it's going to be worth 200K of the monopoly dollars in the future, right? So it is a little bit of an inflation hedge, right? Of course, gold is also, an inflation hedge, right? Because even though you can still produce it, but it's not as easy to produce as it is to produce dollars, right? Like with dollars, I just give a call to Mr. Jay Powell, and he turns on the we're good to go, right? And of course, I'm simplifying that, but that is pretty much close to that, right? So, so that's why I'm excited about Bitcoin. That's the one and only thing that excites me about Bitcoin. That once they get to 21 million, there's not going to be any more Bitcoin produced.
I think going through this is only going to maybe accelerate the process in which the government might implement some kind of digital dollar. I mean, if they would have had that in place, they could have everybody with social or somewhat, somehow register, have their wallet, pushed a button, and the money would have been sitting there instantly, right?
Yeah.
It's kind of a little bit scary in regards to that, because they could make programmable money, meaning if they sent you a stimulus check, they could kind of program it to where you could spend it. So this way, you're not buying Amazon stock, you're buying food and water, right? And so what's your opinion there, and how do you see that?
Yeah, so from a technology standpoint, you're absolutely right? Like they can implement all the technology that Bitcoin has and make it a lot easier and make it a lot more transparent, a lot more smooth and so forth, right? At the end of the day, I still don't trust the government, like worth like in that regard, right? I mean, of course, we have to, we have to work with what we're given, right? Like this is the cards that we have been dealt, right? So at the end of the day, the United States still has one of the most functional, most organized governments, right? Like being somebody that's from Mexico, I've seen it up close, where how lucky we have it here, right? I mean, and I'm not knocking down Mexico by any means, right? Like beautiful people, right? But we've had problems with our government, right? And not to say that the government in the U.S. is perfect. I think that if they do implement a crypto dollar, I think that they're going to try to play the same shenanigans that they play with the dollar, which is they're not going to create a crypto dollar that's going to be 21 million and you're done, right? Like they're still going to want to be able to control that spigot, right? So that's not to say that there's a lot of people on the internet, right, that are saying, "Oh my God, the world is crashing. Like the stock market is going to go down to 1,500. I'm not buying until the S&P is at 1,000." Right? If you wait to buy when it's 1,000, you're going to be waiting for a long time. That's not to say that it's not going to get. I'm not saying that it's not going to go down to 1,000, right? But it might not go down to 1,000 next year, and then in the meantime, you lost whatever 3, 4, 5, 10 years worth of investment time, right? That you could have been using, right? So the example that I like looking at is Japan, right? So Japan has been doing the exact same shenanigans that we've been doing for a lot longer than we have, and in a much bigger way, right? So in the Bank of Japan is buying equities, right? So that's how they prop up their market. Their GDP to debt ratio is much higher than ours, right? They have an aging population problem, right? Like they don't let any foreigners in on a permanent basis, or I'm exaggerating, right? Like they don't let as many foreigners as they probably should on a regular basis to work permanently there, right? So like their population is changing. If you look at the yen, it's still the go-to currency, probably more so than the dollar, right? I mean, when there's a risk-off sentiment, people gravitate to the yen instead of the dollar, right? So that is the example that I look at to see that the Fed and the Bank of Japan and all these central banks can play this game for a long time.
And do you think with the U.S. printing trillions and trillions of dollars maybe over the next year, do you think that it doesn't help its case? And when it comes to China, maybe China trying to be number one over the next decade?
Oh, in that regard, I mean, China will be number one for sure. No doubt about that. I mean, it's just a waiting game, right? So if we want it or not, like that's going to be the case, right? So and for many reasons, right? I mean, like one of the things about China that few people realize is their savings rates is astronomical, right? So like I was looking up the statistic the other day, right? Like I think something in the order of like 30 to 40%. They have a 30 to 40% savings rate, right? The income per capita in China is $8,000, and yet they are saving at a rate of 30 to 40% of their salaries, right? So that turns into investments, right? Like they're not like just blowing it in Gucci bags and fancy cars, right? Like that gets reinvested into the economy. Now, that's not to say that the Chinese government is not playing all kinds of games, propping up their economy and trying to play the same games that we're at right now. But yeah, I mean, China is an interesting X factor, right? And I'm concerned about about the Chinese government. I have nothing to do with the Chinese people, right? I know I have a lot of Chinese friends. They're awesome people, right? But I'm a little concerned of how the game that the Chinese government is playing, right? Like so far, they've been very successful at turning China into a capitalistic society without letting democracy in the door, right? So like in the next say 10 years, right, to use your time frame, what's going to happen? There's going to be 10 to 20 people that control the government of China, right? Like and they can do whatever they want with that, right? Like build up their military, start causing noise with Taiwan, with Hong Kong. Who knows how that's going to play out? So hopefully it plays out for the good. But yeah, there's no question about it that in the next 5 to 10 years, it's going to be a two superpower world without a doubt, if we're not there already.
Cool. And so let's roll, into your field of expertise right now. I mean, AI, automation. What do you see come out of this whole lockdown when it comes to jobs and corporations and salaries and everything over the next 10 years? And, will this further propel companies to move faster to automate things?
Yeah, without a doubt, right? And I see that mostly from my consulting work, right? So like that's my day job. I do a lot of cloud work and integration work, and what they use this fancy term called digital transformation work. And all that means is, trying to have more and more things done by computers instead of being done by humans, right? And then that's nothing new. I mean, that's been happening for the last 60 years, right? Since the creation of the ENIAC computer, like they figured that it was going to increase our productivity. So that is going to continue, without a doubt. Is going to be accelerated by what we're seeing right now, right? I think that there's going to be a lot more work from home, less flying and so forth. I think a lot of the things that are happening right now, I think companies and human and individuals are going to realize, hey, why do I need to go back to any of this, right? So like at the beginning, we were talking about winners and losers, right? I think that a lot of people are buying from Amazon and Instacart and Walmart and so forth, right? A lot of those folks that are doing all their shopping there right now, why would they ever go back to the old way, right? Of fighting crowds in the mall and, oh, they don't have it in my size and yada, yada, yada. Right. They learned it, right? Like you go to Amazon, right? You push a button and it's there the next day, right? And Amazon, the last, say, year or two has been kind of trailing, and it hasn't been performing. It hasn't been a rocket ship, right? The reason that it hasn't been a rocket ship is because they put a lot of focus on their one-day delivery, on removing their dependency with the FedExes of the world, the UPSs of the world, right? And having their own supply chain. But don't be fooled. At any given time, Amazon can just like switch a couple levers, right? And whatever like they're making right now, I don't know, $20, $30, $40 per share. It's probably lower than that, right? But they can just turn a couple levers and say, we're not gonna we're done investing with one-day delivery, and those profits are gonna be rolling in hard and fast, right? Especially because of what happened right now. But yeah, I mean, like people are gonna start using DocuSign. Companies are gonna go into DocuSign. It's gonna be a lot more Zoom. It's gonna be a lot more push to go to the cloud and making sure that everything is that you have your redundancies in place where nothing goes down, right? It's so easy to implement that on the cloud. It's almost like automatic, right? No doubt about that. That's going to accelerate.
Yeah, we definitely, whenever we're talking about technology, I feel like we're always talking about, the older generations and them adopting to the new, what's new. And maybe everything now being on lockdown is pushing the older generations to get more digital, have an understanding of how it works, how to get on Zoom, how to communicate with their family from across the world. It's those kind of things I believe will accelerate everything, and even get back to, like you said, some kind of digital dollar or something, where at some point something like this is going to occur where they need to push it on people and people will learn how to adapt quicker, and then moving forward everyone will realize the convenience of it and how much faster it is, and they'll continue using it.
Yeah, absolutely. I mean, grandma's on Facebook, right? I mean, like it's zooming, right? So yeah, without a doubt. I mean, like and it's not that hard anymore, right? It's a lot easier. Like look at the before the call, I kept on shutting up Alexa, right? But yeah, and that kind of like dovetails into this whole AI wave that's coming behind the cloud wave, right? Like right now, when I talk to companies, when I talk to Fortune 500 companies, it's not 3 years ago. It was, I don't know about cloud. It's not secure. Blah blah blah. Right now, they're in the FOMO stage, right? Like I need it now. Put it in. I don't care like how much I have to spend, right? When it comes to cloud, they're in the FOMO stage because they see all the other companies getting on, right? And they realize that if they don't get on, that they're going to fall behind. Let me give you like 2 minutes of why they're finally realized, right? Yeah. The biggest advantage of the cloud is the elasticity of the cloud. What that means is back in the old days, right, when I needed to set up a database, right, and I wanted to manage my 100,000 employees, I went through this whole long, prolonged process of provisioning software, right, and provisioning hardware, where I needed to order, get approvals, blah, 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 and do sizing, right, do hardware sizing. And I said, okay, look, I think I'm gonna need, 100 terabytes for storage and 100 gigabytes for computing, blah, blah, blah. And what ended up happening every single time was that you either over provisioned or under provisioned, right? Like nobody can predict the traffic, right? Like 3-4 years into the future, right? And even if you predicted the traffic 3 years into the future, maybe you predicted Monday's traffic, but they didn't predict Sunday's traffic, right? So now you have this huge hunk of machine that on Sundays it's not doing anything, right? Or like after hours, it's not doing anything, right? What the cloud allows you to do is to think of computers as being elastic, right? So that you can move up and down the amount of machines that are working for you, right? So if I have 100,000 people hitting my website, I might have 100 machines handling the traffic, right? But I can set up the machine in such a way, or I can set up my infrastructure in such a way that if all of a sudden I get a rush of traffic, automatically, I don't have to move a finger. It's all set up in the rules that I set up, right? Automatically, machines start getting spun up and it starts handling that extra traffic, right? So now all of a sudden, like 5 minutes later, automatically I have another 100 machines right now handling my 200,000 people in the website. And just as easy as it can ramp up, right? Just as easy as the traffic starts going down, it starts ramping down, and they automatically start shutting down, and you get less traffic. So you only pay. It's kind of like electricity, right? You only pay for what you're using, right? So when you put a company that's doing that, that's using the elasticity of the cloud against a company like my current client, which I'm not going to name, right? But they're cloud anti-cloud, right? They're going to have problems, right? They're going to have 2, 3, 4 times higher costs in infrastructure. In number one, in infrastructure. Number two, in people that are managing their infrastructure. So they're not going to be able to compete. So they finally got religion on the cloud. And just like they're getting religion on the cloud right now, they're starting to get religion on artificial intelligence, right? And that is going to be 10 times bigger than the cloud, right? And that kind of dovetails into what you were saying of the acceleration, right? So all these things that people they think that they require humans, in the next 5, 10, 15 years, it's all going to go away, right? And we see that already, right? Like self-driving cars, right? Trucking is going to go away. Taxi drivers are going to go away, right? So that's what we were talking about at the beginning of the call, right? Seeing not only what's happening right now, but where we're going into the future, right? And the self-driving cars, that's just one simple example, right? I mean, I was having a conversation with my kid who's going to law school, and I was telling him, dude, you're going to be obsolete in the next 20 years. And he didn't believe me, but it's true, right? Because, I mean, they're going to get to the point where computers can accurately read briefs, right? And do due diligence, right? And I know that you've been doing this, right? You're very big on automation of your due diligence and your servicing and so forth, right? But it's only going to get to the point, it's only going to get worse and worse, or better and better, depending on your perspective.
Yeah. I mean, people ask, over the blockchain and how these different aspects can be applied. And it's like, when you start getting into all the thoughts about it, I mean, automation, like we're 20, 30 years out on a lot of stuff, but you could visualize everything that could be automated, from borrowers' payments to evictions, the whole gamut, right? To lease up. I mean, real estate's been a lagger in the market for automation, but a lot of new startups over the last few years have come into that space, and we're going to see over the next 10 to 30 years that get automated. So with all this automation, what is your quick opinion on what people should do in their own business, and how will that also affect the job market?
Yeah, I mean, get aligned with the power structure. Get on the right side of the curve, right? Get on the right side of the line, right? So, and you don't have to be a computer whiz, right? But just for example, start looking into maybe like setting up like a taxi service, right? Where you buy 3 or 4 Teslas, right? That have the self-driving, right? That's going to be a huge opportunity. I'm certain that Tesla's not going to deploy the fleet and buy the fleet, right? They're still going to need that financing, right? They're still probably going to have that franchise model, right? Where you can like buy 2 or 3 of those, right? Take advantage of it. I mean, like automate all your things, right? Like really get into chatbots. If you're into real estate, right? I see a lot of people using chatbots to automate or streamline their lead generation and so forth, right? So learn about it, right? But you don't have to be a programmer. You just have to learn the tools and get on it, right? I mean, again, there's so many for every opportunity that's getting lost right now, a new opportunity is getting created, right? So look at CEO engineer, like search engine optimization engineer. That job didn't exist, even like 10 years ago, wasn't that big, right? But now everybody's looking for an SEO, right? Like somebody that's really good at creating websites or setting up like a Shopify e-commerce site, right? Like that job didn't exist even 10 years ago, right? So, and you don't necessarily need to be a programmer. You might be a designer, like somebody that you might need to know a little bit about technology, but you don't need to be a complete guru. Eventually, it's gonna get either like really scary or really easy, right? Eventually, and I'm talking now more like 50, 100 years from now, right? And the logical consequence is that one of two things is going to happen. Either we're going to have what I call the magic counter, right? What that means is a counter in your kitchen where you can just say banana and like a banana appears, right? Like Alexa, give me a banana, and like the banana is going to be there. Or we're going to get to the point where computers are going to get that, and I don't want to I guess we're, it sounds like we're going to be ending in like on a bad note, right? But computers are going to get so smart that there's a lot of scenarios, right? But one of the scenarios is that we become the animals in the zoo, right? And the computers kind of like take over the world, right? I mean, and we're not nowhere near that, right? As technology gets better and better and better and better, and computers potentially get smarter than us, right? That could happen. That's a possibility, right? So hopefully, I think this is one of Elon Musk's concerns, right? Like he's very anti-regulations and so forth, but that is something that he keeps on pushing, right? And I see that where it doesn't take, once you get to a level where computers are crazy smart, like a bug here or a problem there or like a intrusion somewhere else, and the genie could be out of the bottle and we're in deep doo-doo, right? But hopefully we can control that growth as we go along. That's way too into the future.
So based on your background and experience, I mean, are you pretty much on board and believe or verify what Elon says a lot into the future, whether it's 30 or 50 years out?
Yeah, I mean, so let's say it's not 30, let's say it's 50, let's say it's 100, let's say it's 200, right? Yeah. I mean, at the end of the day, hopefully humankind is going to last a long time. 200 years of time to evolve technology. Look at what we've done in the last 30 years, right? I mean, it's been an amazing ride, right? I mean, we like 30 years ago, we didn't, I mean, or maybe I'm not like, I don't have my numbers straight, right? But like, it wasn't that long ago that PCs were invented, right? So that where everybody had a computer, right? And that's only like 30, 40 years ago, right? But so multiply that times 5, that's a humongous time frame, right? So I'm not saying it's going to happen. I'm just saying we have to be very aware that that's a possibility. And again, we're nowhere near where that can happen, but that's kind of like one of the logical evolutions of what's happening in artificial intelligence.
Yeah, I either say use AI in your business or somehow invest in companies that are, right? And this way, sure, you're taking advantage of it one way or another.
Absolutely.
I think as an entrepreneur or investor, one of the most important things in life can be your, significant other or partner. Can you kind of go into maybe your wife and how she is the backbone and supportive of you and how important that is for people?
I thought I was a backbone for her. No, I'm completely kidding. I'm so glad that we're gonna be able to touch on that, Joe. This is from Robert Kiyosaki, right? Like your wife, your partner, your spouse is the number one most important member of your power team, right? And I know you know this because you have a really strong woman over there with Jen, right? And I'm so lucky to have the same thing with Karen over here. We're such a power team. I mean, like the symbiotic relationship that we have is amazing, right? And she's kind of like in the real estate business, she's kind of like the brake, right? She's like the one that keeps on saying like, what about this? Like don't buy it because of that, right? And it's a good back and forth. Like it creates some friction, right? Like where I might be like really gung ho about our property, and she's like completely, like, hold on, hold your horses, right? But you want that in your life,
Yep.
right? Where you need that like yin and yang, right? Like you need like that aggressive, conservative person, right? And so far in that department has worked great. She's also like she's an accountant, and she works for a big firm. And so she's ultra conservative, right? When it comes to like tax deductions and making sure that everything that all your I's are dotted and your T's are crossed, right? So I'm constantly asking her, like, what about, hey, can we get some PPP money? Give me some of that, I want some of that Trump money, right? And she's very clear that we don't qualify. So yeah, but it's great to have her on my side, on my team. She's my thunder buddy. She is the one that, if I disappear, right, she's going to be the number one suspect, right? But no,
She has the
awesome.
most to gain it from your disappearance. No,
Yeah, it's awesome stuff. Go ahead.
it's good, man. It's good. Same here. Jen, is obviously helping us put this on and behind the scenes working to put the display together and everything. Otherwise, it's not really my forte, and I probably wouldn't get to it. And she's been supportive in all of our real estate ventures, and over the last 5 years or so, we moved around a bit. We lived in Puerto Rico. We had 2 kids, and now we're living in Raleigh. So, she's along for the ride and supported everything, and it's been great. It's been great.
That's awesome.
I know a lot of people are probably having their relationships tested during these times, and
Sure.
Someone may look at it bad, someone may look at it good. But if you're not able to get along and work together throughout this period of lockdown, which has only been about a month, it's probably not the right relationship to be in for the long haul.
Yeah, no, absolutely. I mean, this is a great test for everything, right? To see if your relationship is really as strong as you thought it was, right? And if it's not, right, like you better get back on it and make sure that it's tight, right? Like making sure that you're checking in on them, making sure that your health, right, is tight, right? I mean, a lot of the folks that are having issues with this, like as it turns out, a lot of them have what they call those comorbidities, right, where they have some other underlying issues like diabetes and heart disease and so forth, right? So I'm not saying it's not tragic, right, that we're losing them, right? But you have to take care of your health. Otherwise, this is from Tony Robbins, right? So Tony Robbins says that people think of disease as the lack of, they think of health as a lack of disease, right? But just because you're healthy and you haven't had to go to the doctor and everything you feel okay, doesn't mean that you're healthy, right? Like maybe you're in that position, but you're like 50 pounds overweight and you're eating like crap and you're not exercising and you're just very stressed, right? So you're like like one cold away from like a pretty bad like hospital visit, right? So you have to constantly, there's a lot of balls that you have to be juggling, right? Like health and relationships and finances and so forth. But what's the choice? I mean, you have to, right? So make sure that you spend that hour, on your health. Make sure that you spend that hour a day on your relationship. Make sure that you spend that hour on your finances, and keep those balls in the air moving constantly all the time.
Cool. And as we're getting closer to wrapping it up here, typically out of every event or life event, there's bad things that come out of it, but there's also a lot of great things that will come out of it. Taking advantage of this time to be doing some things and improving yourself and working towards your future. What do you see as the greatest and most positive things that will come out of this for yourself and your family?
Right. Great question. I just saw here in the chat too that Bill McCaffrey is on the chat, as well as Karen Bird. So yeah, I mean, he's the one that I was thinking of when I said that thing, right, about like staying in your lane, taking care of your business, right? He's very right about that, right? Don't be diversified, but don't stray too far, right? Like this is also from Fuquan. Quick story about Fuquan, right? Fuquan Bilal, another one of another amazing person, another Steve Lloyd's partners. When I was at Steve's weddings with him, he was telling me about how he tried to diversify, right? And he read a book how you needed to be diversified, and so he's like, okay, let's diversify. So he bought 2 things. He bought a car wash, and he bought a hair salon. right? And he was thinking, oh, this is the same thing as real estate, right? I'm renting the chairs, right? And then I'm renting the space to get the cars washed, right? And as he quickly realized, or maybe not so quickly, maybe a couple of years, before he kind of got out of that business, it's not the same, right? So I know I'm kind of like speaking out of the two sides of my mouth, right? But you have to balance, right, between diversifying yourself, diversifying your investments, diversifying your knowledge, and making it too broad is tricky, right? So like the way that I describe this too, right, is think of like this pyramids, right? So like a pyramid can be shallow, right, and long, like that, or a pyramid could be more like a pike, right, where you have narrow and high, right? So same thing for your investments and for your knowledge, right? And it's actually very like tied together. You want to have this shallow for your knowledge, right? You want to have the shallow, broad knowledge, right, of like knowing a little bit of everything, right? But then you want to have this 2 or 3 or 4 at the most, right, peaks of very narrow, focused knowledge, right? So like I know that Marty Happel was saying he might have joined this call. I know that he's crushing it with flips, right? I can tell he's like ultra focused, right? He's just focusing on one area, right? Like one town, just flips, right? That's his peak, right? And then I know he knows about notes, and I know he knows about crypto, and I know he knows about a lot of other things. But that's your shallow part, right? And it's okay to have those 3 or 4 peaks, but then realize too that if you have 4 peaks, they cannot possibly be as high as if you had 1 peak, right? And you laser focus on one, right? So I think that what you want to shoot for is have that shallow pyramid and have the 2 or 3 peaks of knowledge and financial investment that in there, right? So I know I didn't answer your question. I completely blew it off, right? Like it was more like
it's all good, man. It's all right. That's what it's all about. I mean,
Yeah.
I guess just refine into, just what you see as all the most, maybe give me 3 most positive things you see coming out of this for yourself, and yeah, give it to us.
Yeah. I mean, I think one of the huge positive things that I have seen is that we've seen a lot of like the worst in people in these times, right? But we've seen also like a lot of the best in people, right? I mean, so like all the people that are working tirelessly, and unafraid at the grocery stores to continue to help us feed ourselves, right? Like all the nurses and doctors, all the, they're just doing it, right? I mean, like they're the soldiers in this fight, right? In this battle. I mean, like, and make no mistake about it, right? It is a battle, right? So, kudos to them, and like the positivity that they operate with, right, is amazing, right? Similar to what I was saying at the beginning of the call, right? Like all the positivity that I have been seeing in people all along, right? It's like times 10 right now, right? Like, I mean, like Steve Lloyd is posting, 10 times more on Facebook, about how positive he is, right? And pumping us up and cheerleading us, right? And I know that I haven't spoken to him in a little while, but I know that he's taking like 10 more calls to help people, right, and to like pump them up and to get them out of their funks, right? So the people that we know we can rely on to inspire us and to help us have been there, and have been there times 10, right? So let's keep that positivity going, right? Let's keep on helping each other, and we'll get through this.
It was great having you on. I mean, we'd love to have you back again in the future, get updates. For anybody that wants to reach out to Alberto directly, his information was posted throughout the video, and you can see it again here on the bottom. Tomorrow we'll be live again, 12:30 Eastern with Steve Lloyd. He'll be on tomorrow, so stay tuned. And we appreciate everybody for joining today. Any last thoughts you want to leave with, Alberto?
Yeah. I mean, please reach out, right? I mean, my information is there, and I'm not. I didn't post it for you to invest with me or work with me. I mean, it's just like reach. Let's have a call and just kind of shoot the breeze and see, take your pulse and see how you're doing, and see how I can help you and how you can help me. I mean, honestly, I feel very blessed, and I don't feel that I need any help, right? I mean, I've been lucky enough, right, to kind of been checking all the boxes, right, and most importantly, my health is good, right? But yeah, I'm ready to help, roll up my sleeves, and if you're down in a funk, if you're having some issues with anything, right? Just give me a call and let's talk it out.
I appreciate it. I appreciate it. So enjoy the rest of the day, and we'll talk shortly.
Thank you, Joe. Take care,
Bye.
buddy. Bye.